Hello and welcome to the first episode of Keys to Generational Wealth, where we are going to be discussing smart and actionable ways to build wealth that outlive us. I'm Arinola Atunnise, your host and your go-to lady on all things real estate, and also the founder of Properties Everywhere Limited. So whether you're just joining us or you've been on this journey with me, welcome. This podcast is for you, the bold dreamer, the smart investor, the legacy builder. Now, today's episode is one that I'm super duper excited about because it's often misunderstood by many people, but can actually be a true game changer for all investors in all levels. Think of it like owning shares in the real estate investment portfolio without physically owning the property, and that way you earn steady income, growth potential, and without the hassles of having to manage your tenants or properties. And to help us unpack this session, we are joined by someone I really admire, someone that is a giant in the Nigerian real estate industry, Mr. Debo Adejana. He's the managing director of Royalty Point Limited and the founder of School of Estate. He's known for his passion for educating investors to invest right and build wealth that would outlive them. Okay, welcome, Mr. Debo, to our show.
Thank you very much, Harry. It's my pleasure to be here. Thank you.
Okay, so I want to thank you in advance because I know it's going to be a value-packed conversation already. Yeah, so we are going to be talking about leveraging REITs, real estate investment
Trust schemes.
Yes, for diversified investment portfolio.
Okay, great.
Yeah, so let's kick off and get started. Yeah, so for our listeners, we would like to know what exactly REITs is and how does it work for someone that is just hearing about it.
Okay, basically, right, and thank you for this opportunity, and I say hello to your viewers. So just as it is, REITs, 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 okay, so it's real estate investment trust scheme. That's a full real estate investment trust scheme. And the way it is I call it paper real estate. Okay. It is something that I said, so there's an attribute of real estate. Real estate is highly illiquid. Okay. Highly liquid. And then another aspect of real estate is that it is high ticket, largely. Like I usually say, most people, their rent or the purchase of a property, if they have done that, will be the biggest transaction they would ever have in their lifetime. Probably their rent or the purchase of a property. Okay, will be the biggest real estate ticket transaction they would ever have, because real estate is typically a high ticket transaction. So the fact that it's high ticket, the fact that it's highly illiquid, that is, it cannot easily be converted to cash, makes REIT very, very important and strategic in any investor's portfolio. Because what REIT then does is that it treats the illiquidity nature of real estate and helps to demystify the high ticket nature of real estate. So with REIT, you can get into real estate with pennies. And then with REITs, you can easily convert your investment into cash, because most REITs are listed, publicly listed, publicly traded. So you can buy and sell them like you're buying and selling the shares of a listed company, as it were. So in Nigeria, you can almost say that we have two types. So we have the REITs and we have the RECO, Real Estate Investment Company, and Real Estate Investment Trust Scheme. Those are the two recognized by our SEC, that is Security and Exchange Commission.
Okay, wow, thank you so much for breaking it down so clearly. I'm sure this is like the aha moment for a lot of listeners because they don't understand, they don't know what it's all about. And then maybe we might just have someone Googling, how can I buy shares in Banana Island or Ikoyi and all of that. So in your experience, what are the key advantages of investing in REITs? right? Compared to the traditional route of owning a property.
Property on your
Yeah.
own. Yeah, so it is indirect ownership. When you
Okay.
invest in REITs, you are not going to directly be owning the properties. However, the REITs or RICO you are investing in owns the properties,
Okay.
as it were. So one of the major advantage of investing in REITs is the opportunity to diversify your portfolio.
Okay.
It helps with diversification, and by that extension, okay, then helps with de-risking your portfolio.
Okay.
Okay, as it were. So that is what you can say is a major, because most REITs would hold investment in multiple properties.
Okay.
So they can have residential, commercial, hospitality, recreation, all of those,
Okay.
And when I teach real estate, so one of the things I say is that there are 8 ways to do real estate.
Okay.
There are 8 ways. And you will be leaving some money on the table if you are not exploring all the 8.
Okay.
But you see, it's difficult for one person investing directly in those assets to be involved in all the 8. Okay. One of the ways you can then do that is by investing in REITs that has enough portfolio that covers all of those 8 hands.
Wow, thank you so much. And now that we've tasted some of what it entails, like the sweet benefits, let's go straight into the menu now. What are the different types of REITs we have? How can investors benefit from it? And all of that.
Okay, so there are 3 major types of REITs, right?
3 major types.
3 major types. There is the one we call the equity REITs, which invest in properties.
Okay.
And then for rental income and all of that. And for income generating properties, okay? Equity REITs. Then there is the mortgage REITs, which more or less gives out mortgages. And then the way money is made is the interest charged on those mortgages, okay? And then there is the REIT that is the hybrid. It's a combination of these two.
Okay.
It does income generating properties directly and also issues out mortgages. However, it is not so common, okay? So even in Nigeria, we are allowed to have those 3 according to SEC rules, okay? But the most common are really the income generating property investment REITs. They are usually, I am aware of maybe one mortgage REIT in Nigeria. And it's not listed even. Okay. It's privately held, but one. It's not listed publicly, I mean.
Publicly, okay.
But it's one that I'm aware of. However, we have 3 listed REITs in our market, and there are a number of privately held or privately listed REITs as well that are income generating.
Yeah. Okay. Now, before someone listening goes, some people might think, oh wow, it sounds too good to be true and all of that. That what are for every investment comes with its own level of risk. What are the red flags people should watch out for before they want to go into REITs? Before considering it, what are the red flags? What are the common misconceptions?
So I would say that this is it. And this is the advice I give to people. Look, if you're investing in any REITs, it's paper you're investing in. Okay. But you see, behind every REIT, there are real estate assets, or at least a real estate asset. Okay. That is the underlying assets on which that paper opportunity is resting. Okay. Right? So you hold it a duty to yourself as an investor to do your due diligence. Okay. Your due diligence, because in real estate is caveat emptor, buyers beware. So your due diligence starts from identifying the underlying assets, the brick and mortar that the paper is sitting on. Right? And appraise that brick and mortar in terms of the value of it, in terms of the possible income it can generate, as against what is stated in the prospectus.
Okay.
and convince yourself that these things tally.
Okay.
Because if you misinvest, let's
Yeah.
say that you just take, especially for those that are not listed, so they didn't go through maybe some level of
License and
vetting and
all
all,
that.
those that are pseudo, because there are also pseudo REITs that
Okay.
operate exactly like REITs, and some of them are not within any structure that is licensed or supervised,
Okay.
So that becomes a challenge. But how you do it is appraise the assets, the underlying assets,
Okay.
vis-a-vis. So we'll take that again. How you how you do it is appraise the underlying asset vis-a-vis the prospectus, what they've said, what they've promised in terms of valuation, in terms of possible returns, projections, and all. So that is what I would advise anyone. Don't be intimidated because, with REIT, we are saying that it helps with the illiquidity. So a property can be, the example I usually give is, let's assume that Nigeria wants to sell the national stadium.
Okay.
I would think that the fantastic way to do that is to just build a REIT around it.
Okay.
So let's assume it's valued for 500 billion naira. Build a REIT around it. Or less, you say?
No, I said $500 billion.
Yes, dollars are million naira. You shouldn't be passing in dollars. So, billion naira, So, I mean, build a REIT around it will be an interesting way to sell it. And I'm looking forward to such transactions happening,
Okay.
I would be glad to be a part of it. Building a REIT around it. And, so you do the valuation, then you do the projections in terms of what the national stadium can generate in terms of income from football play, tickets sold, spaces rented, all of those things. And you do it into some years, 5, 10, 20 years, to be able to say, you know what, this is what we are pricing the shares, that makes it to come to 500 billion that you are buying it. Okay, so once you buy, right, you will see that it will be easier to sell National Stadium that way because each unit can come to 50,000 naira.
Yeah.
And that would mean having like 10 million units. In no time, you will sell it. Banks recently raised money in the public market. And they were raising effortlessly. Well, don't let us say effortlessly. They were raising comfortably 200 and something, 300 and something billion. And so you can easily, with the right projections, with the right things done, sell National Stadium. That's sales transaction, conceptualization, doing the paperwork, getting the necessary approval, and offering to the public, listing it, and all of that may not take more than 6 months. But if I give somebody the brief to sell National Stadium and is looking for an individual investor, either individual or corporate investor, that will put 500 billion down, it's going to take more than 6 months, most likely. Do you understand? So that is just the advantage. So I hold my 50,000 naira, which means I hold a part of National Stadium.
And every other person does.
And every other person does. Now, the beautiful thing about REITs is that mandatorily, by law, they need to distribute nothing less than 90% of the revenue.
Okay.
90% of the surplus needs to be distributed as dividend.
Okay.
Needs to be distributed as dividend. And then another advantage of it is that it can help with your tax management. Okay. Because now the money is not, that REIT is not taxed as a company income tax would apply to any other company. It is ordinary income that will be like withholding tax and all that will be taken from the person that, it is the income of the person that is making the dividend that will be taxed, as it were. The company itself will not really get taxed as per company income tax. So tax benefit and of course liquidity also. So if you're looking for income and then diversification of whatever, all of those works with the REIT.
Wow, thank you very much, Mr. Debo. Well, I hope everyone is still listening because this next bit is for those that want to build strong and also diversify their real estate investment portfolio. So, and that goes to my next question, Mr. Debo. Let's talk about diversification in REITs. How can investors diversify? What do they need to do to get started to build a well-rounded and resilient real estate portfolio?
Okay, fantastic. So the basic thing they need to
especially in Nigeria and across Africa.
Yeah, so it's interesting that you said that. So for Nigerian REITs, right, by the regulation, they cannot do more than about 25% of their fund outside of Nigeria.
Okay.
Okay, and even that has to be within Africa.
Okay.
So that's so we are Africanizing or nationalizing our investment. But the simple action to take once you want to diversify is to ensure that you have REITs or some REITs in your portfolio.
Okay.
Beyond buying 1 2 bedroom here, 3 bedroom there, 1 flat apartment there, 1 terrace building, 1 land and all of that. Beyond doing all of those physical assets directly, invest in REITs that are investing in income generating properties. Okay. That way, the bigger the size of the REIT, the more opportunities to diversify. Really. And when you're looking at diversification, I would say watch out for opportunities that can leverage on currency fluctuation as well. You know, so that helps. So you're not just diversifying on the basis of types of properties, you're also diversifying basis of income, currency as it were. So that's what
so
to
when you
look
say
out for.
Currency, are you speaking about maybe like forex, dollar generated
Yes,
pounds and all of that?
yes, dollar denominated transactions, REITs that can do
something
dollar
across
denominated
across
the shores. Now that may be foreign REITs or pseudo REITs, because typical REITs in Nigeria, as regulated by SEC, should not do international outside of Africa investments. But pseudo REITs that are maybe licensed or regulated in another way but are operating similar to REITs can still do those foreign investments. Okay. And even the regulated ones can do dollar denominated investments that are in Nigeria.
In Nigeria. Wow, that's such a rich and insightful one. We could go on, but we promise to keep it tight and very impactful. So let's wrap it up with a final practical question.
Okay.
For those people watching now and want to benefit from REITs, do you have can you share with us any plans or what you have in place, how they can benefit from it in terms of the REITs, and then also diversify their real estate investment portfolio?
Yes. Okay, so there are opportunities they can leverage on with us. For example, of course, also like I said, REITs are listed in the capital market, so they can check and do their own fundamentals and analysis and all, and decide whether it's good for them. But with us, we operate what you call a pseudo REIT that operates exactly like a REIT, but it is structured like a cooperative. And is well licensed and regulated. Is 8 years in the making. So it's not something that I just started. And we have investments diversified across currencies.
Like you earlier said.
Yes, and across property types. So, and the beautiful thing is to be a part of it. Currently will cost you something under 150,000 naira
per share.
Not per share. There's a structure behind it. You know, I said it's a cooperative structure. So there is a portion of that one less than 150 that goes for shares. There's a portion of it that goes for savings. There's a portion of it that goes for membership fee and stuff like that. Subsequently, once you join, you can then buy as many shares as you want at any time, depending on the rate of the shares. Our shares are valued yearly, just like a typical REIT. Share prices can move. And then we share dividend also yearly, just like a typical REIT. And the cooperative has a beautiful structure. You also need to share almost like about 70 or more % of your surplus to members. So, so it's collectively run. We have got good corporate governance in place by way of the management committee, the investment committee, the valuation committee, and all of that. So, everything is properly set up.
Okay, so quickly, can you just tell us the benefits of people investing into it?
So, share appreciation.
Okay.
dividend.
Okay.
Then, lastly, you can check how the investment in the cooperative is going and do a mirror
Okay.
of your own with
Okay.
your private fund. Do you
Okay.
understand? So
To make
what?
comparison?
Yeah. So something like if we say the fund is investing in XYZ property,
Okay.
knowing what we presented and all, and you have extra fund of your own, you
Okay.
can do a parallel investment also in XYZ property. So beyond what you have in the fund that is investing in XY, you also are directly investing in XY. So when the returns of XYZ property comes, you
Okay.
benefit as a direct investor, and
Okay.
you also benefit as a member of the fund
Fund.
that invested. And we always present our opportunities to members so that they can do that. We even encourage members to
Okay.
do parallel investment, and we help them also coordinate and manage it as much as possible beyond what they have in the fund.
Wow, wow, wow. Thank you so much for joining us,
You're
Mr.
welcome.
Debo,
You're
and
welcome.
for generously sharing this knowledge. I mean, it's something we always say to people, don't just watch and waka pass. You've listened to this now. What action are you taking? Because that's the most important thing. And we've got some special offer for you watching right now for anyone that is looking to invest in REITs, or you want to know more about it, maybe free guidance on how it works and all of that. Just send a DM with the code PEL REITs to us, and then you can get all the information, how it works, how you can benefit from it, and you can get started. So until next time, my name is Arinola Atunnise. This is Keys to Generational Wealth, and let's keep building wealth that would outlive us. Thank you very much. Cheers.
Cheers. Bye.
To everyone listening, I hope this episode has sparked something in you. And if you're looking to start your real estate investment, whether you're a first time home buyer or you're looking to refine your investment strategy without physically owning a property, this might just be what you're looking for. Remember, it's not about what you know, but taking action. What you know now, what are you doing about the information? Are you taking action, or you just want to walk a pass? You don't want to do that. And if you're ready to begin your real estate journey without physically owning the property, REITs might just be the next door you need to open. Until next time, I'm Arinola Atunnise, and this is Keys to Generational Wealth. Let's keep building wealth that would outlive us. Thank you.